welcome to today's episode of the Property Pod. My name's Libby, and today I'm joined by John from Foster's Financial. Welcome to the podcast.
Thank you very much.
And today we're going to be speaking about your guide to equity release and mortgages. So John, could you tell me exactly what a mortgage is and how it works?
Yeah, so very simply, a mortgage is an amount of finance which would be secured against a property, and you would take that loan out over a period of years, pay it back monthly, and at the end of the loan, hopefully, obviously pay it back on and not have anything secured against the property.
And what factors should you consider when you're choosing a mortgage?
When choosing a mortgage, so first thing I say is always get advice. There's plenty of fantastic advisors out there, locally and across the UK, depending on how you wish to interact with someone. But the things that you should consider from my point of view are monthly payments. You know, what are you paying at the moment? Are you renting? Are you living at home? Are you able to save some money? Making sure that you're not overcommitting yourself by too much, and that it's affordable and maintainable for the longer term. So that's number one. Number two is, what are your plans with the property? Is it something that you want to live in for the longer term, or is it the shorter term? If it's something that's shorter term, you want to make sure that mortgage isn't tied in for too long. And your advisor will guide you through that and talk to you through the positives and the negatives as to a longer time period or a shorter time period. But most of all, it's making sure you understand and you get some advice from someone, ideally a professional, but if not, someone that understands that who can give you some advice.
And can you explain what equity release is and how it differs from a traditional mortgage?
Of course. So equity release is a mortgage, but it's aimed at borrowers who are older in years, who are perhaps coming to the end of their employment and reaching retirement. So traditionally, it's people that are aged over 60. Some providers do have different tiers, but that's the demographic that it's aiming at, is 60 plus. And the way equity release works in its most common form is a lifetime mortgage. And the key difference between that and a regular mortgage is that the rate is fixed for the duration of the loan. So you're never going to have to renew it like you would with a normal mortgage. It's not income assessed or credit assessed. So they make a judgment on how much you can borrow based on your age, your health, and your property value.
And what are the pros and cons of equity release?
So it's becoming more and more common with people who are reaching retirement. For example, they might have worked hard for a lot of years to build up this fantastic equity in a property, but might not be able to enjoy their retirement because of their income. So some of the pros are definitely that it allows you to unlock all that hard work you've done during your working life, and realise some of the value within your property. People do things such as make improvements to their house, help out their children if they want to see the benefits of an inheritance early, for example, by giving them money to help start them on the property ladder. They might do things such as go on holiday that they've never been able to afford to do. Could be vast. The benefit really is that it allows people who are reducing their income to finance their property in an affordable way that requires them to make no monthly payment at all if they don't want to. The negatives of it are, because it requires no monthly payment, that payment has got to come from somewhere. So the interest rolls up on top of the mortgage and compounds. And what we mean by that is that every month and every year, the amount that you owe increases. And we would generally say the amount you would borrow would double every 16 years or so. Obviously, it does depend on the rates, and your advisors will give you some more specific advice around that. But the amount that you would borrow would double over a certain period of time.
And what are the potential risks associated with equity release?
That it's going to deplete the equity within your home. There is some bad previous stereotypes that your beneficiaries would be left with a debt and a bill to pay because the amount that you borrowed would be worth more than the house. But the majority of equity release providers now give a no negative equity guarantee. So you don't need to worry about passing on a bill to your family member. The other risks are that if you're borrowing more than you need, then you might be paying interest on money that you don't need to borrow if you were going to leave it in a bank account or something like that. So you just need to be extra sensible and cautious with the amount that you choose to borrow and when you choose to do it.
And what advice do you have for somebody who's considering either a mortgage or equity release?
Understand your market. So the best way to do that, I believe, is to speak to an independent professional. There's plenty of us out there across Suffolk, Essex, and the rest of the UK. Speak to a professional, definitely. Don't go too soon, too quick. Take your time. These things need to be considered carefully. You need to understand all of the positives and negatives specific to your individual circumstances, which could vary from person to person. So speak to an independent advisor that will give you that information. Take it slow and make sure you're doing the right thing for you in your circumstances.
And what steps should somebody take before considering equity release?
Well, any advisor will go through with you and look at alternatives. So equity release, as we've said, can be an expensive form of borrowing over the longer term. So we would always look at things like a regular mortgage, if that's an option. Would an option be perhaps to downsize and sell your property and move into something smaller that would allow you to release some cash? Do you have other assets that perhaps you're not utilising, like a buy-to-let portfolio or holiday lets or holiday homes? Could we make better use of the equity involved in those before looking at securing finances against your main home? And do you need the amount that you're borrowing? Have you considered what the costs are to do the extension, to go on holiday, to give money to the grandchildren or children to do with as they wish? Is it the right thing to do? And are you releasing the right amount?
Brilliant. Well, that's great advice. Thanks so much for coming on today. And for all you guys at home, if you did enjoy this episode, please don't forget to like, share and subscribe, and we'll see you next time.